welcome to another Major Market Movements End of the Week Market Review for August 14th, 2015. I'm Quad G, and in this video we're covering the FX markets, the Dow and crude oil, along with the bond market and some other commodity markets. So we're starting off with the US dollar here, and I wanted to go in and look at the 1 hour chart here and give you a brief outline of where I think we are with the count to the downside. I do think we have a wave 1, a wave 2, a sub 1, and a sub 2, which is a flat, and then a wave 3, possibly a wave 4, and now we're working on a wave 5 of 3 to the downside. The other way that I count this, which also works out, is this could be a wave 1, a wave 2, wave 3, wave 4, and then an extended wave 5 to the downside. That's another possibility. So we only have the first impulse complete, and then we have we're working on an A, B, C up to the upside. So key resistance between those two counts is going to be right here at the top of wave A or wave 4. And that high is about 96.80. So if we break above that, it would be an indication to me that we've got wave 1 done. We're just working on wave C of 2 to the upside, maybe into the middle of this previous congestion right here, right around 97.20, to finish wave 2 of C, or C of 2, excuse me, and then we'll come start traveling back down into wave 3. So either way, it's still looking bearish, but there is room for a little bit more upside, maybe into the lower 97 level before turning right back around and diving again. The QG3, we do have the potential for a move up, maybe to backtest the 20 DMA or even the 10 EMA at the green, or the 20 DMA up here at the which is currently at 97.20 or so. So that's a possibility. But once we test either of those two levels, either the 10 EMA or 20 DMA, I think we'll turn right back around and start shooting downward again. Let's see, on the weekly here, the dollar closed nearly right back where the previous bull candle was a couple weeks ago, and that opened up at 96.58, and we're closing this week right at 96.58. So basically have undone the previous bullish candle, seeing some follow through off of the bearish inverted hammer candle from last week, and so the expectation is for some more downside to come. EWO, can't really show you anything there that's of interest. RSI, we did have the negative divergence at the top here with a higher high in the price over the last swing high, but on the oscillator, RSI, we had a lower high in the oscillator, so we have that's called a negative divergence between those two, and now you're seeing the fall through to the downside. We're tested the 40 level right now. I do think we're going to see that break fairly soon and start jamming down here to the 30 level or even lower, coming up fairly soon, maybe next week. This is 1 hour. Let's go to the daily. The daily MACD is open to the downside. That's bearish. And the weekly is open to the downside as well, also bearish. So everything for the dollar is still looking pretty bearish. There is a chance that we could get a small bounce up to the lower 97 level, but there again, I think at that point you'll just see another rejection and another shot to the downside. Let's take a look at the euro. All right, so euro sprung up here as expected. I think we are just running into a little bit of resistance here. We might get a pullback here slightly, maybe down even into the one point. I don't know how you would call that and abbreviate, but 1.1000 level. I guess you could call it the 11,000 level. That would work. Have that come down here, possibly test that 11,000 level. Also testing the 20 DMA, which is starting to come up also, and should be a key level of support if this market is still in a midterm bullish advancement in the weeks ahead. On the weekly, or QG3, we're still in a bullish alignment, though the incursions above the upper Bollinger Band have caused it to cool off a bit, and we may be starting a corrective move to the downside here going into next week. Euro on the weekly, we've got a solid, positive candle to the upside. That's looking pretty bullish. Follow through from last week's bullish hammer candle there. So that's moving along as expected. And EWO, can't really show you anything there. RSI, come up to the 60 level and testing that right now. But as long as any pullback keeps the RSI above the 40 level, I think there's still a good chance of some further upside to come. MACD is wide open to the upside on the daily, and on the weekly open to the upside as well. So that's all bullish. And so everything in the euro is looking pretty bullish here. May see a corrective move down here to this 11,000 level, but after that, I think we'll bounce back up again. All right, let's take a look at the Aussie dollar. All right, I'm not going to go in the LA wave count here. There is a hammer candle, as you can see, a daily hammer right here a couple days ago. We haven't seen any real fall through to the upside yet, but I do think it's coming. I do think there's a chance that we could see some fall through maybe next week or the week thereafter, a pop up into this, fill in some of this manic drop up here in about the mid 7,500 level. QG3 is still in a bullish alignment there, keeping above the 20 DMA so far on a daily closing basis. On the weekly, we do have a bullish hammer candle on the weekly, again reinforcing this low at 72.13. Keeping above that, I do think will be a good chance of some upside, though it may be limited. And the EWO, this is good to see. We're seeing the EWO come up, and currently on the oscillator, we have a higher high than the last swing high. All right, so this is setting up a positive divergence here in relationship with the price action. We've got a higher high in the oscillator, even though the price is still at a lower high compared to the last swing high. So this sets up the potential, if we do get a bounce up here into the mid 7,500 level and then another shot back down and produce a new lower low, maybe in September or October, that should set up a positive divergence on the oscillator, on the bottom side of the oscillator, helping secure a potentially major bottom at a later time frame. RSI, we're just kind of parked right here in the middle of the 4060 level. It's very neutral. MACD is open to the upside on the daily, but on the weekly we're still slightly open to the downside. So overall, I think there's a chance that we could see some fall through to the upside, though I do think it's going to be limited. I do think we could see another potential midterm top in the mid 7,500 range, and then another possibly one more drive to the downside to a fresh lower low. But with all that movement, that lower low should set up what could be a major bottom in this market before a major climb to the upside that could last potentially several months thereafter. All right, let's take a look at the Great British Pound. All right, so we've been chopping sideways for the last few weeks here. We do have a bullish alignment on the QG3, though the upper Bollinger Band is currently holding as resistance for the time being. So we're kind of trapped between the 20 DMA and the upper Bollinger Band, but I do think we will see a break to the upside fairly soon. The weekly candle is kind of almost an inside positive week. That's really just a very neutral pattern. The EWO is flat, no help there. This last dip to the downside did see support right there at the 40 level, and that's good. But currently we're still stalled right there at the 50 on the RSI, which is very neutral. We want to see this market come up and break above 60 to really confirm that we've got another strong trend to the upside taking place. And the MACD on the daily is open to the upside. That's a bullish alignment there on the daily, and on the weekly we're still open to the upside as well, so that's bullish. So overall picture, I think for the pound, I think there's a good chance that we could see a break north fairly soon here, but I'd want to see it keep above the most recent swing low at 54.24. All right, let's take a look at the Dow. All right, so the Dow's still in a downtrend, still getting lower lows and lower highs, as long as we're below this key level of resistance right here. Where are you? There you go. So on the index, 17,629 is going to be key level of resistance. As long as we're below that, there's still the chances of a further downside are still uh, preferred. But if we break above that, that could change the dynamic and cause a potential short squeeze higher, maybe even up into the 18,000 level again, potentially. So definitely need to pay respect to that 17,629 level going forward. And we do have the death cross did occur this week, as you probably have read about in the news a few times, is the 50 DMA, which is this orange line, did come and cross below the 200 DMA. Now, it is a potential sign in the market that could spook some investors. It hasn't done it every time, but most of the time when you see, let's see if this actually, net Danny is not going to let me go back far enough. But generally speaking, when you have, let me verify something here. Make sure I'm saying exactly what I want to say. And, yep, okay. Generally speaking, when the stock market has come up to new all-time highs and it produces a death cross with the 50 moving below the 200, it's oftentimes a very good a bearish signal and an indication that the market has topped out, or um, yeah, has topped out, and will those 2 points, which were support in the past, would turn around and become potential resistance points going forward, especially when the 200 DMA, which is still cruising north here, it may take a while for it to curl over and start heading back down. Once it starts curling back down, then it's going to more likely become a serious key piece of resistance for a potential bearish move to the downside uh, for the midterm, or maybe even the long term. All right, so on the weekly, we really just have this kind of long-legged spinning top candle. It's really very neutral. If we do get a daily close or a weekly close above this week's high, this high is at 17,629. Get a close above that on a weekly basis, you might see a squeeze higher. But the reverse is the same also. We get a close next week underneath this week's low, intra-week low, at 17,629, or no, not 17,125.81. Get a weekly close below that next week, that's another good indication that this market is still very bearish and could continue to see some fall through to the downside. EWO, really not much to see there. There's no real positive divergence has built up there. Same with the RSI. There's indication here, I think, that there's a counter force here. It seems to me as though the market, the natural market, wants to move to the downside, but it's things like this with all these incursions below the 40, but not quite getting all the way down to the 30. It's like something stepping in here and trying to support this market, trying to keep it above the 35 level, which is unusual, and without letting it go the full distance down to 30 or even lower. So again, it seems as though, call it the Fed, call it market makers, whatever, there's something in the works here that seems to want to keep this market afloat and keep it from falling apart, like I think the natural market wants to. The MACD is open to the downside. That's bearish on the daily, and on the weekly, we're open to the downside as well, wide open to the downside. So all of that is bearish. So the Dow still very much bearish here. While it's below 17,629, I would continue to expect some more downside movement in probably next week. All right, let's take a look at crude. All right, so crude here, I think this move to the downside is getting tired. It's not quite done yet, though. It's getting really close. We do have this short-term trend line that's been tested several times. You could say we almost tested it a fourth time here. So there's a rule of 4 breakout or a rule of 5 breakout potential to the upside fairly soon. So possibly next week. I'll continue to watch it, and if I find some good evidence that we're getting a turnaround here with some bullish behavior to be expected to the upside, then I'll certainly signal that and hopefully get in on a low risk entry. I do think that whatever we get here, it'd probably be at least a dead cat bounce, maybe something significantly stronger, yet to be determined. I think a bounce could come all the way up here to 52. So you're looking at about a $8 to $10 jaunt to the upside, potentially, and that's certainly worth grabbing a hold of, even if it's just a bounce. The weekly does close solidly to the downside, so that's looking bearish. We are on the EWO here. though we're seeing lower lows in the price, we're starting to see higher lows in this oscillator. So we're building up some positive divergence in this oscillator. And the same thing with the RSI. This is the 4-hour. We're seeing lower lows in the price, but higher lows in the RSI. So it's a positive divergence being built up there on the 4-hour. Take a look on the daily. The daily, not as much of a positive divergence yet. I would prefer to see it there on the daily, but we may not get it just yet. We may have to see a pop up here first and then another lower low, and that would probably generate the positive divergence that we need on the daily, or prefer to have anyway. The MACD on the weekly is open to the downside. On the weekly, that's bearish, and on the daily, we're open to the downside as well, bearish. So crude oil is still looking bearish here, but don't be surprised that we may see another bottoming potential here fairly soon, maybe in the lower 40s, 40, 41 maybe. And then from there, we might see a nice bounce up, possibly up to 52 for starters. Maybe more than that, but we'll have to just wait and see. All right. Let's move along to the Elliott wave charts. All right, so here's the U.S. dollar. My expectation is we'll continue to see some action to the unfolding action to the downside. We may see another pop down here soon. Maybe test this last swing low here at 95.45, and then from there we could potentially see a bounce up. This could be like a wave one, maybe a bounce up into wave two, and then the collapse down into wave three thereafter. Here's the euro. This is a 17-month cycle. The last several points, iterations in this cycle did see major peaks, and now we're coming in the month of August here is the 17th month from the last peak here, as I have it measured. And so the question is, could we be getting a major bottom here with a potential 17-month advance from this point? Certainly very possible. Again, just got to play it day by day, but I do see that potential with this particular cycle that we could start to see an advance from this point forward well into 2016, maybe even 2017. Euro again, here's some Elliott wave counting. I see a couple different waves. Either we have a wave one, a wave two, a wave one, and a wave two that still is in the realm of possibility since the action did not break below the base channel line or base trend line here between the origination of one and the end of original two there. So sub 2 kept above that. That's generally what you look for with the sub 2. So there is a potential for a wave 3 and advancement to the upside. The other possibility I see here is just a simple zigzag move to the upside. So we got a wave A, B, C, and then an ABC down for wave X. Let me back up here. We got an A, B, C for W, and then A, B, C down into X. And now we could be working on a wave Y to the upside, or a second zigzag to the upside, depending on how complex it is. And the 31.8% Fibo level is the first point of potential resistance, potential topping spot for that move, and they're at the 1800 handle. If this is a wave 3 of 3 to the upside, then based upon these levels here, I would say there may be very little trouble with the price zooming all the way back up here to the 4,000 level or 14,000 level. I wouldn't be surprised if we do get an actual 3 of 3 going on right here, right now. So it's good to be long at this point in time. There's really no reason to bail that I can see. So might as well hold on to it and see what we get. Could be a nice juicy run for us. Here's another thing that's telling me that we're potentially letting loose to the upside here. We got this long-term resistance trend line that really originated all the way back here in August of 2014. So it's been a year-long descent, and this trend line has held resistance. But just this month, we see this pop up, and it looks like we've back tested that breakout point a little bit. We may backtest it a little bit more, and then from that point, we may be sailing higher with a short squeeze. Again, up to the 1800 level. For starters, maybe much higher after that. Great British Pound, LA wave counts. I do think we've got a wave A to the upside, possibly a wave 1, but we'll go with wave A for now. And then we've got this triangle count that looks like it's complete with an A, B, C, D, E finished. And now we've got an initial impulse to the upside with a wave 1, 2, 3, 4, 5. Looks finished. And now we're working on a wave A, potentially a wave B, and maybe one more leg down for a wave C to come of a 2. So we got a wave 1 here, wave 2. Don't have them drawn, but you get the picture. Wave 1, possibly a wave 2, and then from there a wave 3 up. And I do think it could be coming up here to the 6100 handle, and I'll show you why here in this next slide. If you pull a Fibbo retrace measure from this low down here at 4564 up to 7190, this major swing high up here that was set back in July of 2014. If you the 61.8% Fibbo just happens to land right at 1.61875, which is just an interesting coincidence. So, but I do think there is that potential for a few hundred tick advance from this point upward towards that 6100 level. Possibly higher than that, but at least up to that 6100 level, I think. Let's take a look at the Aussie dollar. The Aussie here, this is the count that I prefer, and I'll show you why in a minute. Some might be thinking, well, we've got a wave 1, a wave 2, a wave 3. This could be a wave 4, and maybe a final fifth to the downside. I see where that's one way of counting it, but there's one thing about that particular count which has a little bit of trouble with it that makes me side towards this particular count, which means that we may see some more upside, but it may be limited into wave C of 4, right up here into the 50% Fibbo level, maybe the 7500 level, maybe the lower part of 7600 for wave 4 to end wave 4, and then another drop to come later on that could dive down into September, maybe even October for a final fifth. And the reason I prefer this count rather than having wave 5 complete is if we go to the hourly, oh, let me get this. So here's wave A. So we got a choppy wave A to the upside, but this resulting move to the downside, if this was wave 4, I'll bring wave 4 down here temporarily. If this was wave 4, the result out of wave 4 is not a 5-wave move. I don't see how you can get a proper 5-wave count out of that. That works. So this looks like a 3-wave move to the downside with an A and then an A, B, C, B, and then one more final C of B. So it looks like some kind of zigzag with a running flat in it. And so the result out of B should be a 5-wave move, potentially a 5-wave. I guess it could be 3 waves, but I prefer a 5-wave move out of here that comes up into the mid 7,500 levels for starters. Maybe all the way up here to 76. Maybe fill in some of this manic space right up here in the lower 7,600 range, and then from there another drop to follow. But that drop to follow could be a major bottom with a final fifth to the downside, and might provide a really excellent long side opportunity to come. Okay, that's it for my coverage of the major market movements for this week. I hope you all enjoyed it, and we'll be talking to you later. Adios.